welcome everybody. Apologies for the delay. We had some technical issues there, but we do have Sean Sanders on the line, and we're waiting for Farzam Hassani from Valor to join us, and I'm sure he will in the next few minutes. All right, so we're going to kick off here. This is Cryptocurrencies for Beginners. Cryptocurrencies are barely 11 years old, and it all started when the mysterious Satoshi Nakamoto developed Bitcoin as a new form of digital currency that could be safely transferred almost instantly without the need for a bank or intermediary. Now, Bitcoin has grown in value from less than a cent, believe it or not, 11 years ago to more than $55,000, making it the fastest growing asset of the last decade, if not of all time. The blockchain technology on which Bitcoin relies is based on some fancy cryptography that allows transactions to be processed without any agent in between. It was only a matter of time before this technology developed other uses. Today, there are thousands of cryptocurrencies, all competing for a space in an entirely new financial architecture that allows people to borrow, lend, and earn interest and send money across borders at the speed of light. This is Cryptocurrency for Beginners, and our main focus in this discussion is how to get involved in cryptocurrencies. Joining us to discuss this are Farzam Hassani, CEO of crypto exchange Valor, who I see clicking on and off there. Hi, Farzam, you've joined us. Thanks for coming online.
Thank you.
And we've also got Sean Sanders, who is CEO and founder of Revix, which is a crypto investment platform. Welcome to you both. Farzam, as a kickoff, maybe explain as briefly as you can, what is a cryptocurrency?
So cryptocurrencies are a new asset class that are underpinned by cryptography. Now, to make that really kind of simple, all it means is that it's the first time that we have an asset that's a digital asset that you don't need to rely on a trusted intermediary to hold it for you. And another way of saying that is that anything digital that you own right now, effectively that's not a cryptocurrency, is held by a trusted intermediary. So if you've got your money is held by a bank. If you've got some stocks, the stocks are held for you by a stockbroker. You cannot actually hold your own money or your own stock, for example. That just doesn't exist in the traditional financial system. So with cryptocurrencies, it's the first time that we have a digital asset that people can actually hold themselves without relying on a trusted intermediary.
Okay, good. Sean, turning to you. Tell us how you got involved in cryptos. And I remember we had this discussion a little while ago, and you said you got involved about 4 or 5 years ago. And at that time, you felt that you had missed the boat. In other words, that the cryptocurrency, Bitcoin in particular, had gone so high, you felt it was a bit late getting in. Tell us how you got involved.
Yeah, it's so weird. I feel like I speak to a lot of people today at Revix, and the people are going, "Oh, I've missed it. Like, it's gone up so much, and it's, this is the end of the road, and I'm not going to get involved now." But that's exactly what I felt back in London 5 years ago when I picked up this big thick book on Bitcoin that looked like, Star Wars sort of novel, and looked at it and going like, what is this weird thing, Bitcoin? And that was sort of where my journey started. I investigated sort of what this digital currency thing was all about. I actually ended up working for a family office in the United Kingdom for a while, and while working for that family office, I got the opportunity, I suppose, to evaluate alternative asset classes. And for some reason, a lot of really wealthy investors, now this is back, 2015, 2016, a lot of wealthy investors actually wanted to get exposure to crypto, but really just didn't know how. And back then, it wasn't exposure to crypto per se, it was actually just exposure to Bitcoin. But the custody solutions and all the rest made that very difficult. And even somebody that was, looking to sort of set up a professional fund-like structure back then was incredibly difficult. I mean, regulators were just like, don't be silly. Like, this is not a real thing. Like, please don't go and try set this up. So that was sort of where I got started.
Okay, and I think Farzam, the same question for you is how you got started. And I think it's also worth reminding people that this idea of having a crypto exchange going back 4 or 5 years was a very rare thing. It wasn't easy to buy Bitcoin. You had to go through some technical hoops to get it. So explain how you got involved in cryptos and how you came to then form Valor.
So I actually initially thought that Bitcoin was a scam, like I think many people did. I had a friend of mine who had started a startup in San Francisco, and he was a very close friend of mine, and I had a lot of respect for him. But when he went into the Bitcoin space, because his startup was to do with Bitcoin, I kind of gave him a call and I said, Adam, do something worthy with your life. This is kind of beneath you. And he said, no, Farzan, I don't think you fully understand. And he started explaining a few things about what Bitcoin was and what blockchain technology was. And ever since then, kind of my eyes have been opened, and I realized what a transformative technology this is for humanity, blockchain technology in general. And then what a fantastic and special asset Bitcoin and other cryptocurrencies were, because they provided an alternative to many of the problems that we see in the traditional financial system. So Valor started really with a desire to bring this to the masses, to bring it to more people. It's still not the easiest thing to buy Bitcoin. You cannot buy it from your bank. You've got to be very aware of a lot of the scams that are out there, that people pretend to be legitimate exchanges or legitimate places where you can buy Bitcoin. A lot of people promise you things about Bitcoin, which it's not. It doesn't give you a guaranteed return, and the price fluctuates. You can make money, you can lose money. So what we decided is, let's just let's try to democratize this asset class, bring it to the masses, which is why we started Valor a few years ago, and now it's 3 years on, and we're very excited to be growing our customer base. We've got close to 150,000 customers now, I believe. I haven't checked the latest number, and it's growing every day. So we're very excited.
All right, Sean, tell us about Revix. Revix is a little bit different. You're not an exchange. You are an investment platform, and you offer bundled investments. So just explain to people, what are bundled investments?
Yeah, sure. So, I mean, we do offer Bitcoin, Ethereum. We will be offering a variety of other top cryptocurrencies on the platform as well. So we're similar to Valor in that sense. However, our niche is really focusing on crypto bundles. And what these are essentially very similar to, say, the Satrix Top 40 or the S&P 500, but providing an ability to invest in a basket of cryptocurrencies with a single click. And the idea behind this is to say, well, we don't really think that anyone can go and guess which of these cryptocurrencies are sort of going to become the next big success story. I mean, you've seen Ethereum sort of blow up recently. 2 weeks ago, you were talking about Cardano. You had then the Bitcoin story that's been ongoing for a while. But we say, like, instead of trying to pick, individual names and gambling in a sense, rather try own a diversified basket that automatically gets updated on a monthly basis. So that's what happens with our bundles. We automatically rebalance and reconstitute our bundles on a monthly basis. And what's also really unique about what we offer is that you can actually go and you buy each of the cryptocurrencies within that particular bundle. So if you buy, let's say, our top 10 bundle, it gives you exposure to the top 10 largest cryptocurrencies as weighted by market capitalization, or should I say, the top 10 cryptocurrencies as measured by market capitalization. And then every single month, we will look at, okay, right, which cryptocurrencies have declined in value and fallen out of the top 10, which have increased in value and moved into the top 10. That's a reconstitution. And then over the month, you'll have some cryptocurrencies that maybe increase in value more than others. So at the end of the month, we'll rebalance that bundle to bring you back so that each cryptocurrency in, say, the top 10 bundle is back at 10%. And we believe that that is the superior way to sort of get long-term exposure to this asset class.
Okay, Farzan, a lot of people have written to MoneyWeb and they're asking, is it too late to get involved in cryptos? They see these fantastic returns that have been made on coins like Bitcoin and Ethereum. I mean, Ethereum is up, I think it's more than doubled since the beginning of this year. I mean, talking about 3 months. I think Bitcoin is up over 500% over the last 12 months. And people think this is really just extraordinary and it's way too late for me. What's your answer to that?
I think it's still very early, to be honest. I think if you look at the global adoption of cryptocurrencies, it is still extremely low. Any asset class that has kind of reached its peak is an asset class that's being traded not by just retail customers, as in people like you and I, but institutions, banks, hedge funds, etc. Those institutions are still just getting into the cryptocurrency asset class. Because of the fact that the regulatory regimes across the world, including South Africa, are still not crystal clear, there is a lot of hesitance from some of the traditional financial institutions to actually enter the space, although there's actually nothing prohibiting them from entering the space. And when you think about the total value of Bitcoin, say, Bitcoin right now is just over $1 trillion US. And if you look at the market cap of gold, gold is well over 10 trillion US dollars. And my belief is that Bitcoin has much more utility and will be viewed as kind of gold 2.0, a digital version of gold. And really, if that thesis is right, then there isn't really any product or service or technology that's gone from analog to digital that hasn't outstripped the value of its analog version. And so I think it's still very early. I mean, we'll come to this later on, I'm sure, Kieran, about some of the risks. But as far as whether it's too late, I think it's actually still extremely early.
Okay, Faizan, just staying with you, your advice to somebody getting started in cryptos for the very first time, what should they do?
So it depends on how much they understand. So I would say that the number one is educate yourself. And the best way to educate yourself, I think, is to actually get some exposure into crypto. And what I mean by that is that because it's new, because you may not understand, the fundamentals of what Bitcoin and cryptocurrency are, I always say, invest a little bit, put in a little bit that you are willing to completely lose, but enough that will make you still pay attention. And that amount is very particular to everybody's financial situation. And obviously, this is not financial advice, this is just my own personal opinion. I think it gets very difficult to kind of be on the sidelines to try to understand Bitcoin when it's theoretical. Come onto Valor.com or Revix or wherever you want and actually buy. On Valor, you can buy as little as 10 Rand, and you can buy 50 other cryptocurrencies as well. And start just trying to understand why did the price go up? Why did the price go down? But please do understand that this is not a get-rich-quick scheme, and that depending on your horizon of how long you can be in this, if you're trying to put your school fees in or your healthcare money in, etc., I would not do that at all. This is put in the amount that you can lose, that you're willing to just play with to understand. And as you understand crypto more, you can put more in or less in depending on what your findings are.
Okay, Sean, the same question to you. Your advice to somebody getting started in cryptos.
So yeah, I have to echo what Faizan said. Like, you have to do your homework. You have to understand what you're investing in. And by understanding what you're investing in, I mean, of course, you're not going to understand everything about Bitcoin when you get started. That's a journey. But it means understand the risks involved. And let's be very realistic. The risks involved when you invest in crypto, there's sort of two kinds I see. There's the price drops that you can have and the volatility and all the rest. So yes, be aware that you can have a significant decline in prices over a very short period of time. Just as you've seen this market increase by over 1,000% over the last 12 months, you can also see it pull back 10, 20, 30%. That is normal. That is all part of sort of a growing ecosystem. Then there's the other risk of making sure that you are using a counterparty, a platform, an exchange that is reputable. As Faizan mentioned earlier, there is no guaranteed returns when it comes to investing, period. Doesn't matter if that's crypto or if that's investing in stocks or anything else. Even government bonds have risk associated with them. So you need to make sure that the platform that you're using is trusted, that the people behind the platform are known, they are public figures, people that ideally are sort of talking about crypto, advocating crypto. Make sure that the teams behind these businesses are also known. If you can't find the team on LinkedIn, or by asking their customer support team or finding that company through one of the company registries, that's an issue. That's a big red flag, and you should not proceed with that investment. Another thing which, I've got a really interesting message about 2 weeks ago. Somebody said, Sean, you're the only director of Revix SA. And I was like, hell, that's actually completely true. We just recently, changed our board because Revix SA is essentially being owned by Revix UK now. We've got a UK headquartered company. And in this process, I was made the only director in order to simplify things. But a company should not have one director. I mean, Revix is about to now have 4 or 5 different directors, but it is incredibly important that a company does have the right sort of governance structures in place. I don't want to be pointing fingers at anyone, but if you're looking at like ICE3X or however you say their name, I mean, I don't know exactly what happened there, so I don't want to speak out of turn, but there was probably some lack of governance structures in place that resulted in that business failing. And if you look at the 2 exchanges in Turkey that recently closed down as well, there wasn't the correct governance structures. So you need to make sure as well that sort of the company is dotting their I's and crossing their T's. So that's my best advice. And when it actually comes to making the investment, as I said before, we believe that a diversified basket that tracks the market is probably the best way to invest. But getting exposure to the likes of Bitcoin and Ethereum, they make up a good portion of this market. Combined, they're over about 65% of the entire crypto market. Just getting started there is a really good place. And again, don't invest more than you can afford to lose. Get started small, and then as you understand the market a little bit better, invest a little bit more over time.
Yeah, Farzam, let's pick up this thing that Sean has just mentioned. A lot of scams happening around Bitcoin, where Bitcoin is really the currency that is being used to affect a Ponzi scheme or some sort of offering some return, which is just unsustainable. We've talked about some of the risks. I think for people who are new to cryptocurrencies, if you were around in 2017, when Bitcoin hit a peak of 20,000, it then declined 84% from that point. That's quite stomach churning to go through something like that, and it's happened many times in the history of Bitcoin. So Farzam, talk a little bit about the risks, and just carry on from that point that Sean mentioned about how you establish the credibility of a crypto company.
So great question. So the risks are, there are a number of risks with Bitcoin. Number one is the market risk, or the volatility, as we talked about. Kieran, nobody knows what Bitcoin's price is going to be tomorrow. It could be up, it could be down. Literally, we don't know. There are people like myself that have a thesis of which way it's going to be going over time because of the fundamental value that it offers society and how it offers a big hedge against our traditional financial system. But what the price is tomorrow or next week or next month, etc., nobody can say. So that is the biggest risk, I think, about the market volatility that people don't understand. And as Sean said, there are no guarantees. That's the first thing. The second thing is, you really need to understand what Bitcoin is in order to understand what the risks of holding it are. So Bitcoin is what they call a digital bearer asset. Now, what I mean by that is if you have a 100 Rand note, that 100 Rand note is a bearer asset. That means the bearer of that note, the person that holds it, that owns it, is assumed to be the owner. When I go to the shop and I pay with 100 Rand, the shopkeeper doesn't ask me to prove that the 100 Rand is mine. It's assumed to be mine by virtue of me being the bearer of that 100 Rand. In the digital space, up until cryptocurrencies, there was no such thing as a bearer digital instrument, because digital things were kept on ledgers that were governed by trusted financial institutions. So with cryptocurrency, there's something called a private key. This private key is a string of letters and numbers that, in effect, to give an analogy, it's like a password in the sense that you need to keep it very, very, very safe. But the point is, if this private key gets compromised, then your funds will get compromised as well. So that aspect of understanding that that's the cryptographic part of cryptocurrency, that there's a key that needs to be secured, that's very, very important. So then the next question is, okay, well, where is that key? How do I get that key? Now, on places like Valor, we make it very, very simple for our customers to buy Bitcoin, because part of our value proposition is that we invest heavily and significantly in the infrastructure that's used to secure these keys. And so when someone comes and buys Bitcoin on Valor, they don't even get a key because we are custodying it for them in the background. Now, anybody that buys Bitcoin is welcome to withdraw the Bitcoin from their Valor platform onto their own personal wallet. But if they do that and they have their own private key, that means they're now responsible for it. And if they lose that private key, then they've lost their funds. So these are some of the risks associated with Bitcoin, which is the volatility, and then also how do you actually hold this? How do you actually secure it? And so Valor basically helps with the latter, with the custody, and it makes it easy, very easy for customers to come and buy and sell, and very easy to see what the price is, because we've got a huge community of people buying and selling, and when they come together, that's where the price is discovered.
Okay, Sean, we seem to have lost him for the moment. Hopefully he's going to rejoin us now. Let's go through some of these questions that the panelists are asking, and if you do have questions, put them through. If we don't get through all of them, we will get to them later. Sean, you're back. Great. So here's a question from... Yeah, fine. Here's a question from Lynn. She says, I understand that blockchain tech will be a much used tech going forward. How does this fact tie into the price of the coins? Surely the money will be made by the software companies producing the blockchain-enabled software and apps. Okay, so we're really talking about coins like Ethereum and Cardano and Polkadot, which have business use cases, which are quite different to Bitcoin. Maybe, Sean, you can pick up on that one.
Yeah, sure. So if you're looking at, let's say, Ethereum as an example, Ethereum is used for many things, not just for payment purposes. And at the end of the day, what's the value of anything? There's a demand and there's a supply for this asset. When demand exceeds supply, or is greater than supply, you have the prices increasing. And that's sort of what you want to see if you want to see an asset increasing in value over an extended period of time. And if you're looking at Ethereum, a lot of Ethereum is being locked in DeFi at this point in time. I think this last month we hit a new record high of $65 billion locked in DeFi. And this is from, 12 months ago, you were looking at like a couple hundred million. So the growth in the space has been absolutely phenomenal. For people that don't know what DeFi is all about, it's decentralized finance. And I think this is a topic that is really going to be spoken about a lot over the next few months and a few years, definitely. And what you can essentially do is you can remove, let's say, a bank from a system or any sort of middleman that is taking or extracting fees. So if you're looking at, let's say, Compound as an example, I can take a Bitcoin that I have, I can put that Bitcoin into Compound, and this is a very simplistic example, but I can then take out a loan in dollars collateralized against that Bitcoin. That loan that I'm taking out in dollars is given to me by some random people from around the world who are putting dollars into Compound and earning interest from actually giving that money to Compound. Now, Compound's a protocol, right? But in order for all of this to happen and for transactions to be verified and for this entire system or application to work, you require Ethereum to do this, right? You actually require ETH because you need to collateralize, you need to verify transactions. So there is a fundamental use case of Ethereum used right there. And there's also a lot of Ethereum being locked up. Just like I mentioned, Bitcoin could be locked up in a smart contract. You could have Ethereum locked up. So that's where you start seeing the use of the various blockchains and the demand for these blockchains starts seeing, or the demand for the cryptocurrencies on these blockchains start increasing. So I think if you're looking at sort of who makes the money when you're looking at a decentralized sort of structure, it's actually the participants that use that blockchain. So it's no longer, let's say, like that central party, that central bank that would be lending money out and all the rest and making money from interest. It is the participants who are lending the dollars, which are on the Ethereum blockchain as well, out to the participants. So yeah, the networks are really driven by fundamental adoption. Like you need people actually using the cryptocurrency. For Bitcoin, a big part of Bitcoin's value is actually accumulation. People need to, and as Fazan mentioned earlier, it is very much like digital gold. I agree with him that this is sort of gold 2.0. And a big part of that means that, well, people are going to buy it and they're going to store it. And that means there's going to be a scarcity element. I can't remember the exact statistic, but I think it was around about 65% of all of Bitcoin's new supply were bought up by the users of Square, and they've got their Cash App and the PayPal users within the first 3 months this year. That's a huge amount of supply that's just been sucked out of the market. And remember, Bitcoin's got a sort of a fixed inflation rate. So that means if there's only a certain amount of Bitcoin coming into the market, but a greater demand, the prices go up over time. So each cryptocurrency is slightly different. And getting into DeFi, it's never really that straightforward. You really actually do have to, I think, dig into, understand how decentralized financial applications work and all the rest. But it really is fascinating when you're seeing the adoption increase and how the prices then start increasing over time. Let's not, I think, also get ourselves wrong. There is a lot of speculation in the space. People are still speculating about the future values of these various cryptocurrencies. That's driving 95% of the price movements. I don't think we should kid ourselves any other way, but there is the fundamental adoption which is happening,
Okay, question here for Fazan, actually 3 questions. This is coming from a listener who wants to know, is Valor only a trading platform? Second question, if somebody wants to trade, I think this is a misspelling here. If somebody doesn't want to trade, but rather wants to store the cryptocurrency with the thought of getting good returns, can they do that? And what is the minimum investment amount? So Fazan, can you pick that one up, please?
Great question. So Valor is a trading platform, but we also offer a wallet with that trading platform. So effectively, you can come on, you deposit some money. The minimum purchase price of a Bitcoin is 10 Rand. So I think this is also one of the biggest misunderstandings of the space, is that one Bitcoin right now is trading around 850,000 Rand, but you don't need to buy an entire Bitcoin. You can buy 10 Rands worth of a Bitcoin.
think
We
you've
have no
frozen.
sign-up fees. There's no month, and so 10 Rand is the minimum amount. Monthly management fees. There's no any other fees. Can you hear me?
Yes, hearing you fine. Carry on.
Kieran, can you hear me?
Yes.
So I was saying there's no sign-up fees. There's no monthly management fee. There's no fees except for when you trade, and it's a very low fee. And so you're welcome to keep your funds on Valor if you want to, or withdraw it to your own wallet, depending on what your desire is. So it is a trading platform, but it's a platform where you can come, buy and sell and hold and transfer your cryptocurrencies from Valor. So I hope that answers all three questions.
Very good, Sean. Just pick that one. And by the way, the costs. I think you should just mention there very quickly, Faizan, the costs of trading.
Sure. So we have something called a simple buy feature, which is very simple for new beginners, and basically it has some protective measures in place you don't exactly know what you're doing, and the price is moving along protective measures. So basically that's 0.75% of the trade. And then we also have advanced trading platform, which is much more complex, and it's really for the professional traders. But that's where you get into things like limit orders, stop limits, etc., terms that maybe the public wouldn't be familiar with. But in those, we actually charge 0.1% for what's called a taker fee, and we actually pay our customers that provide liquidity 0.01% or 1 basis point. But those are for the advanced traders. So for new traders, I would say go into our buy and sell feature. It's a very simple interface. It's a very low fee of 0.75% per trade, and there are no fees on top of that whatsoever as you stay on Valor.
Okay, Sean, if you can just answer that question about the fees at Revix.
Yeah, so we don't have any limit orders. We only have simple buy and sells. So when you go onto our platform, the way we work is you'll say, okay, Red, I want to buy Bitcoin, or I want to buy our top 10 bundle. And the moment you click buy, you can get started with as little as 150 Rand at Revix. The reason that it is 150 and not, I think, as low as what Valor offer is that we actually have to go out and buy in your, let's say, your top 10 bundle, each of those cryptocurrencies for you on your behalf. And unfortunately, buying 1 Rand for each cryptocurrency is just not possible yet. We're working on it, but we're just not there yet. And we would then offer, we offer a 1% buy fee and a 1% sell fee for that purchase and sale. The only monthly fees that we have are for our bundles. So if you buy Bitcoin or Ethereum or USDC on our platform, you won't be charged any fees. We custody them on your behalf with professional custodian partners for nothing. So part of that purchase price or purchase fee and part of that sale fee covers that custodial fee that we have every single year. But for our crypto bundles, part of that rebalancing process where we'll then rebalance that bundle on a monthly basis and buy top performers, move them into the bundle, remove the poor performers, and reconstitute the bundle and all the rest, we charge 0.17% a month, which equates to about 2.04% a year. Now, if you look at sort of the amount of rebalancing we're doing, and I can say as well, if you prefer to try create your top 10 bundle yourself, and you obviously manage then the top 10 cryptocurrencies yourself, go just rebalance a few months. Go do this for like 2 or 3 months and just see what your costs are, because they are substantially higher than just 0.17% on any exchange that you would use. And yeah, I think that's just sort of our fee structure. I think it's very much the same as any other platform when it comes to buying and selling as well.
Okay, so I think just to clarify there, the reason that you're doing that is because the market capitalization of cryptocurrencies are moving up and down all the time. So Bitcoin might be doing very well this month, and you might end up with, instead of 10% of Bitcoin in your portfolio, you'll end up with 12 or 13%. So you've got to rebalance that and bring it back to 10%, right?
Yeah, so I think if you look at maybe this last month, you had Ethereum that just did exceptionally well. So Ethereum made up 17% of the bundle come the end of the month. Now we would have to take that big gain that Ethereum has and bring that gain back down to so that it's equal with all the other cryptocurrencies. So we would take essentially some profits from Ethereum and we would redistribute that to the cryptocurrencies that haven't performed as well. So invest a little bit more in Bitcoin, invest a little bit more in Cardano, et cetera, such that when the new month starts, every single cryptocurrency that you own within that top 10 bundle is equally weighted.
Okay, Sean, I think this is a question for you from Bandile. He's asking, with indices, the weighting of the investment follows the best performing commodities. Is there an option similar to that for cryptos? And I think we have sort of covered that with the top 10 bundle that you mentioned earlier. Do you want to pick that one up again?
Yeah, so I guess people say the top cryptocurrencies, and like, what do we really mean when we say the top? So when we say the top at Revix, we mean the 10 largest, because, you know, what does a big cryptocurrency mean? It means that a lot of people believe in this cryptocurrency. They've assigned value to it, and therefore it's grown in value and, you know, formed one of the largest and most reputable cryptocurrencies. So we include the top cryptocurrencies in our bundle. We are a passive, and this is what they call them in the traditional world, but like a passive bundle company. I can't say fund because we don't offer funds. So when you actually buy our bundles or buy any of our bundles, we've got 3 of them, you're actually buying the underlying cryptocurrencies rather than buying into a fund or anything like that. And yeah, I think the really interesting offering that we have as well is that when you make a purchase through Revix, and this is something I didn't mention earlier, we actually connect you to a variety of different exchanges. So we're not an exchange ourselves, but we'll connect you to an exchange like, let's say Binance or Luno or Coinbase, and, you know, in the future potentially Valor as well, and then be able to try get you a superior price when it comes to actually executing a particular trade. So this is very useful for larger customers, so customers that are maybe investing, let's say, R1 million, where they don't particularly want to, you know, drop R1 million and it gets eaten away by the order book. You would maybe want to execute that across multiple trading venues and get slightly better prices than you could on a single trading venue.
Okay, there's a question here. How quickly can funds be withdrawn? Farzam, you want to answer that one quickly?
Was the question, how can funds be withdrawn?
How quickly can funds withdraw? So if I request a withdrawal on Valid now, how long will it take before it appears in my bank account?
Yeah, so we have what's called blitz processing and fast withdrawals. So if you're withdrawing a cryptocurrency, the cryptocurrency gets submitted to the blockchain within seconds or minutes and basically arrives at its destination with however long it takes to confirm on that particular blockchain. So it's an automated process. And then with ZAR, you're welcome to withdraw your ZAR at any time. There are limits because of banking processing, but effectively, if you use our fast withdrawal option, then you can basically get your RAND from Valor into pretty much any bank account in South Africa within seconds or minutes. So if you do a regular withdrawal, then that could take up to 2 business days because of the way the banking system works. But if you do a fast withdrawal, which is a little bit of a higher fee, then it can get into your bank account within, as I said, seconds or minutes. So really, one of the things that we pride ourselves at Valor is we automate as much as we can. So there's not somebody that's kind of, you know, processing things. It's all automated. We're plugged into the banking system. We're plugged into the cryptocurrency systems. And as soon as your instruction is received by our system, it gets processed immediately without any human intervention.
Okay, Sean, you want to answer that question? How quickly does it take to withdraw from Revix?
Yeah, sure. So we are plugged into the banking system. I mean, our withdrawals, unfortunately, we don't have a blitz withdrawal option available yet. It is something that we're working on. So our bank withdrawals take anywhere from, depending if you're with the same bank as us, we bank with Nedbank, that'll be immediate, but otherwise it'll take anywhere from 12 to 24 hours to reflect in your account. Sometimes over weekends, it'll take a little longer. And if it's a cryptocurrency withdrawal, we only process Bitcoin withdrawals to simplify things for our customers. And that, as Farzam mentioned, it takes really as long as a blockchain confirmation will take. So depending on who you're withdrawing the funds to, or which kind of wallet or another exchange, it's sort of dependent on the processing time of the Bitcoin blockchain.
Okay, we've got quite a few questions here, but we are running out of time. I think I'll take 1 or 2 more. There will be a video available of this webinar afterwards. It will be emailed to everybody who's attended. But here's quite a good question, and I'd like to throw this to Farzam. Where is the value in crypto? It's not a physical asset. So how do you value it?
Great question. We could spend an entire seminar on this topic. But in short, let me ask the person that asked the question, where is the value in the rand or the dollar? And they should realize that 95% of dollars or 95% of rands are in digital form in any case. They're not backed by gold, they're not in paper form, they're not in silver form or any other metal or other commodity. And in fact, the question should be, why is it that someone will give you $100, which is a piece of paper, that, you know, someone's a couple of security features and it actually costs 15 cents to produce, yet you are willing to accept it for hard-earned things that you produce in your time. So the point is that money is really the based on society's belief in it. And money has always changed over time, right? And one of the things about money being good, Bitcoin is probably one of the more call that people cannot change. It's based on community consensus. So basically, it's really important that that person that's asking that question, the first place they should start is not what gives value to Bitcoin, what gives value to the RAND, to this piece of paper that has a couple of squiggles on it and some security features. Once you start realizing that money is just effectively a story that society creates for itself, you start realizing that Bitcoin is just a better story. I know that gets philosophical, but really we need to get down to a good understanding of what money is. And money in and of itself, you cannot eat it, you cannot clothe yourself with it, you cannot shelter yourself with it, but it is recognized as society, by society, as a credit, as a claim on some of the world's resources. But what I would say is that that is based on what people's understanding and beliefs are of what is the most scarce and frictionless asset. And cryptocurrencies are more scarce than our regular money and are proving to be much more, proving themselves to be much more frictionless than any money we've ever had. And that's why we're seeing a transition of people entering into the cryptocurrency space. I hope that answers it in a nutshell. We could talk an entire seminar on that.
That is a big subject. Well answered, though. Thanks for that. Okay, we're going to wrap up. But I want a final response from both of you. Is it irresponsible not to be invested in cryptos? Sean.
I have a cryptocurrency business. Valid Fazal has a cryptocurrency business. We definitely incentivize to say, yes, it's irresponsible. But no, this is another asset class that you can allocate money to. And if you want to, invest in, let's say, a startup, you choose to invest in a startup company that has a lot of upside potential. If you want to invest in stocks, you choose to invest in stocks. I think you put your money into areas where you believe there can be value and value created in the future. And I believe that if you believe in the crypto narrative, like you should be allocating some money to it. If you're wanting to go down this rabbit hole, you know what it's like. When you have money in something, you pay more attention to that area. So I think it's a great way to sort of incentivize yourself to learn. But do I think you should definitely go out and buy crypto? No, I think if you're a naysayer, I would love to be able to sit here in 5 or 10 years time and be like, yeah, I told you so. But at the same time, like, no, you should allocate money to what you believe in. I think we're all different. I think crypto has got an incredible upside opportunity, but there's risks, and that's not for everyone. People sometimes they don't like the volatility, they can't handle the volatility, and that's totally okay.
All right, Farzam, same question to you.
Yeah, I think what I'll say is that Valor was created to serve humanity. All right, we really want to serve our customers very well. And so what I will say unequivocally is that Bitcoin at this stage is not for everyone. So if you are someone that is barely making you've got a little bit of savings that you're trying to save for your child's school fees or some health care or your rent, you should not, in my humble opinion, be buying Bitcoin. All right? If someone has some excess amount beyond their monthly expenses that they're investing outside of what their daily to monthly or yearly needs are, then I would think it's silly not to be in crypto, right? But it really depends on who you are, what your financial situation is. At this stage, Bitcoin is very volatile. I don't see that going away anytime soon. And so for people that cannot afford to stomach that volatility or to take that loss, if they need to get out for their school fees or their rent, then you should not be in Bitcoin. But if you have some money to invest, you certainly should be. You're doing yourself a disservice if you aren't allocating some of your portfolio to Bitcoin or other cryptocurrencies.
we're going to leave it there. That was a fascinating discussion. There are some other questions we didn't get to. We're going to try and do that after the seminar. As I said, you are going to get an emailed webinar, a copy of the video. Some of the questions have been answered on MoneyWeb Crypto. For example, somebody asking a question about tax implications of trading. Please go and have a look for that. We've got a very specific podcast on this issue. It goes in great detail on that, and that in itself is a webinar on its own. I want to thank very much Farzan Hassani, who is the CEO and co-founder of Valor, for joining us, and Sean Sanders, who is the CEO and founder of Revix. And thanks very much for sharing your insights on that. To both of you.